if you are over 60 years old, or if you are a lawful permanent resident, a green card holder, a series of powerful changes in the American banking system are coming to a head around 2026 that could turn your financial life upside down. And I want to be very clear with you right from the start. This isn't some vague future threat or a small regulatory update you can ignore. This is a fundamental shift in how banks monitor your money. Imagine this for just a moment. You go to withdraw a few $1,000s in cash for a family gift, or you try to send money to a relative overseas. For your entire life, this has been a simple, normal transaction. But under this new environment, that very same act could trigger an automatic alert, leading to your bank account being frozen without any warning. They're calling it enhanced verification. And while that sounds protective, for people who don't understand what's happening, it can feel like a digital cage. We are moving away from a system of innocent until proven guilty, and towards one where you are guilty until proven verified, for any transaction that a computer algorithm finds unusual. The good news, and I really mean this, is that nothing in this video is designed to frighten you unnecessarily. The entire purpose of what I'm about to share is to prepare you. If you know what is coming, if you understand the new pressures on the banking system, and if you follow a few straightforward steps, you can protect yourself completely. Over the next several minutes, I'm going to walk you through exactly what these changes are, why seniors and green card holders are being singled out, and most importantly, what you need to do right now to stay safe. So take a deep breath, try to relax, and let's go through this together, step by step. Section 1. The 2026 Rule. What's really happening? First, let's answer the most important question. What exactly is this new environment? Let me be crystal clear. There isn't a single law passed by Congress called the 2026 Rule. That would be too transparent. Instead, what we are seeing is a perfect storm, a convergence of three powerful forces that are fundamentally altering your relationship with your bank. It's a combination of new technology, evolving regulations, and new enforcement priorities. Number 1, the rise of artificial intelligence monitoring. Financial institutions are under immense pressure from federal regulators like FinCEN, the Financial Crimes Enforcement Network, to stop fraud and money laundering. To do this, they are deploying sophisticated AI systems that analyze your financial behavior. These systems create a digital profile of you, how much you spend, where you send money, how often you withdraw cash. While not mandated by a single rule, by 2026 these AI platforms are expected to be deeply embedded in the compliance frameworks of nearly every major bank. This isn't optional for them, it's the new cost of doing business. Any activity that deviates from your established pattern can now trigger an automatic alert. Number 2, the quiet expansion of safe harbor immunity for banks. This is one of the most critical and least understood changes. Historically, a bank was hesitant to freeze your funds because they could be sued for damages if they were wrong. That's changing. Driven by a desire to combat staggering losses to elder fraud, regulators and states are giving banks more power to act first and ask questions later. We see this with FINRA Rule 2165, which applies to brokerage and retirement accounts held by specified adults, meaning those 65 and over. This rule allows a firm to place a temporary hold on your money if they reasonably believe financial exploitation is happening. While well-intentioned, this idea is influencing the entire industry. More than half of U.S. states have passed their own versions of elder hold laws for banks, giving them legal immunity to freeze a senior's transaction if an algorithm or a teller thinks it looks suspicious. They can do this without fear of being sued by you for the delay, which creates a hyper-cautious environment. Number 3, and this is perhaps the most significant change, is a new era of data-driven enforcement. Government agencies are connecting the dots like never before. FinCEN is using data analytics from millions of bank reports to target individuals. The IRS is using AI to cross-reference tax returns with global banking data. And for green card holders, this includes increasing data sharing between the IRS and U.S. Citizenship and Immigration Services, USCIS, putting not just your finances, but your residency status under a microscope. When you combine these three forces, all-seeing AI, legal immunity for banks to freeze your money, and aggressive government enforcement, you get this new reality. It's a system where the burden of proof has shifted entirely onto you, the customer. Section 2. The Digital Cage for Seniors. So why are people over 60 being targeted? Now I know what many of you are thinking. It's not because the government thinks you are a criminal. It is a cruel irony. It's because many of these regulations are designed to protect you. The framework is built to stop financial exploitation, but the implementation is a blunt instrument that often punishes the very people it's supposed to help. Because Americans over 60 control a vast amount of wealth in traditional bank accounts, you have become the primary testing ground for these new automated systems. Let's talk about what this looks like in the real world. These aren't hypotheticals. These are scenarios that are becoming more common. Imagine you're 70 years old. You've banked at the same institution for 30 years. Your granddaughter is getting married, and you want to give her $5,000 in cash as a gift. For decades, this was normal. But today, this could be a major red flag. That your financial life is predictable, Social Security comes in, bills go out. This large cash withdrawal is an anomaly. The bank's AI could flag it instantly. Under the state elder hold laws, the teller is now encouraged to question you and potentially place a temporary hold on the transaction while they investigate. Or consider another scenario. A home repair emergency. Your roof is leaking and you need to wire a $10,000 deposit to a contractor. But because you haven't made a transfer of this size in years, the system may freeze it. The bank might try to call you, but if you miss the call, the freeze remains. Meanwhile, your payment is delayed. This is the reality of the new protective measures. Here are the hidden triggers that can instantly lock you out of your finances. Large or unusual cash withdrawals. Anything outside your normal pattern, sometimes as low as a few $1,000s, can be a trigger. Sudden changes in transaction patterns. This includes wiring money, especially internationally, or making a large purchase you've never made before. Outdated Know Your Customer, KYC. Information. This is a silent account killer. If your ID or address on file is decades old and the bank can't reach you to update it, your account can be automatically restricted. Gifts to family. A wire transfer to a grandchild or a child living overseas is now viewed with intense suspicion by automated systems designed to spot scams. For seniors living on fixed incomes, a 2-week freeze isn't just an inconvenience. It can be a full-blown crisis. Section 3. The Microscope on Green Card Holders. For green card holders, the situation is just as precarious, but with an added layer of complexity. The scrutiny you face is tied directly to your immigration status and your ties to your country of origin. In the eyes of these compliance systems, foreign ties can equal risk. The first area is your reporting obligations, specifically the FBAR, or Report of Foreign Bank and Financial Accounts. Any U.S. person, which includes green card holders, who has a combined total of over $10,000 in foreign financial accounts at any point during the year, must file an FBAR. This isn't new. What is new is the efficiency with which the government can now enforce it. With AI and global information sharing, the IRS often knows about your foreign accounts. If their system detects an account that you haven't reported, it won't just trigger an audit. Your domestic bank may be flagged to review your account. The penalties for FBAR violations are devastating and can cost you more than what's even in the account. The second area is the intense pressure on banks to constantly verify your identity and residency status. Banks are required to ensure your green card is current and that your address on file matches your USCIS records. Let's look at a real-world example of how this can go wrong. A few years ago, Bank of America faced backlash for freezing accounts of customers they suspected were non-citizens, sometimes based on flawed automated data. While they paused that program, it highlights the danger. This kind of automated scrutiny is becoming the norm. Here are the hidden triggers specifically for green card holders. International wire transfers. Sending money home to family or receiving funds from overseas is the #1 red flag. Extended travel abroad. Spending several months outside the U.S. can trigger a review of your residency status by your bank. Foreign financial footprints. Having a foreign pension or even a small dormant bank account in your home country can lead to major compliance headaches if not properly disclosed. Inconsistent personal information. If the address your bank has doesn't perfectly match the address USCIS has on file, an automated system can flag it. For a green card holder, an account freeze isn't just a financial problem. It can feel like a threat to your very presence in this country. I know this is a lot to take in, and it's frankly alarming. But you are not powerless. If what you are hearing right now is new information that concerns you, please take 1 second to click the subscribe button below. The reason I ask is simple. My goal is to give you the knowledge you need to protect yourself, and by subscribing, you won't miss any critical updates. It helps protect people in our community. Thank you. Section 4. Your 4-step protection plan. How to stay in control. So now we come to the most important question. What should you actually do to protect yourself? The smartest thing you can do is take a few practical steps right now. I'm going to give you a clear step-by-step action plan that will keep you safe. Step number 1. Immediately conduct a full information audit. This is the single most important thing you can do. Walk into your bank branch. Sit down with a banker and say these words. I want to conduct a full review of my Know Your Customer information to ensure it is completely up to date. Verify they have a clear, current copy of your driver's license or state ID, and for permanent residents, your unexpired green card. Confirm your address and phone number are absolutely correct. An outdated address is a top reason for an account to be flagged. Step number 2. Practice proactive communication. You have to get ahead of the algorithm. If you are planning any large or unusual transaction, I recommend using a threshold of $3,000. Talk to your bank before you do it. Tell them, I am planning to withdraw $8,000 next week for a home renovation. Or, I will be wiring $5,000 to my son overseas. Ask them to put a note on your account. This creates a record that the transaction is legitimate. Also, designate a trusted contact person on your accounts. This is a person the bank is authorized to call. A freeze can often be solved with a 15-minute phone call if you have this in place. Step number 3. Master your reporting obligations. This is especially critical for green card holders. You must determine if you have an FBAR filing requirement. Remember, it's a $10,000 aggregate threshold across all foreign accounts. If you have any foreign assets at all, even an old pension, consult with a tax professional who specializes in international reporting. The penalties for getting this wrong are too severe, and banks are now on the front lines of flagging accounts they suspect are non-compliant. Step number 4. Diversify your access to funds. In this new environment, having all your money in one institution is a single point of failure. Consider opening a secondary account at a different institution, like a local credit union. Credit unions are often smaller and may offer a more personal approach. If your main account is ever frozen by an automated flag, you will still have access to funds to cover essential expenses while you resolve the issue. The banking world is undeniably changing. By 2026, the quiet hum of AI monitoring programs will be the new reality. It is a system designed with good intentions to fight crime and protect the vulnerable, but its execution is deeply flawed, placing seniors and green card holders under an unfair microscope with algorithms that lack common sense. But you do not have to be a victim of this system. The single most important message I want you to take away from this video is this: knowledge is your greatest protection. By taking control, auditing your information, communicating proactively, understanding your obligations, and diversifying your funds, you build a fortress around your finances. Don't let a robot lock you out of your life savings. Please share this video with every retiree, every senior, and every green card holder you know. This is information they need to have. And finally, leave a comment below. Have you already experienced a strange delay or intrusive questions from your bank? Your story matters. It can help warn someone else. Thank you for watching.